Let's meet our guest for the main event. Dahlia Khalifa is a World Bank senior economist who joined the doing business team of the World Bank in June 2007 after years of experience in economic and policy analysis, investment banking, and strategic communications. Ms. Khalifa has established and managed financial services companies offering services in corporate finance, brokerage, private equity investing, management consulting, and other advisory services with a focus on Africa and the Middle East. She's worked extensively with nonprofit organizations, founded Egypt's International Economic Forum, and served as vice president of the American Chamber of Commerce in Egypt. She has a bachelor's and master's degree in economics and a master's in international law, and she's currently finishing up a doctoral degree in international relations at Georgetown University in Washington, D.C. So, Dahlia, welcome to Metanomics.
Hi there. Thank you for having me here.
Great. Well, I'm really interested in hearing about the World Bank's doing business report. But before we get there, I would. Your background is fascinating, and you must be one of a very small number of female investment bankers who have worked in the Mideast. Can you tell us a little about that experience?
Well, it was a very enriching experience, but for me it was a very natural one. It was a time I started my businesses in the Middle East at a time when financial markets and equity markets in general were taking off in the region. And you'd be surprised to know that there are quite a number of women in that field actually in the region. But I guess a much smaller number who actually started their own businesses. I can just say that it was an exciting time of my life, and I learned quite a lot.
Okay, fantastic. And let's see, this is the second doing business report that has been presented in Second Life. You did one last year, and then you presented this year's just a few days ago, late last week. So this is, as I understand it, this is really just a supplement to your usual task of presenting the report to real life audiences. Is that right?
Indeed. This is our sixth annual report, and our reports are usually followed by 3 to 4 months of heavy travel all around the world, what we call our roadshow, taking our report to countries, explaining what it is that we do, why we do it, what are the results of the report. And last year was our first foray into Second Life, and I must say it's been very rewarding. In fact, usually during our launch events, we have audiences anywhere between 50 to 150 people. We've far exceeded that in Second Life in a single event. So it's been a good experience. It's a new area to be in, and we're finding that we want to stay here.
Mm-hmm. Now, what's your target audience when you do the road show? Who are the people that you are trying to reach?
Well, when we go out into traveling and elsewhere, we're looking to speak to people who care about what it is that we're talking about, which is basically regulatory reform and the impact that the regulatory environment has on small to medium-sized business growth and development. So we're looking to speak to government officials, to academia, to the media, to the private sector, really anyone who cares about sparking that engine of growth, which is a small to medium-sized business in any economy.
Mm-hmm. Okay, and that I guess brings us to the question of what is the goal of the Doing Business Group more generally, and in particular, I guess a question I have is why are you focusing on the startups and operations of small to medium-sized businesses?
Well, the basic truth to economic growth in the economies of the world is that they are dependent in large part on small to medium-sized businesses. Even in more developed economies here, such as the United States or in Europe, the small to medium-sized entrepreneur is the lion's share of the economy. It's where most jobs are created. It's where most growth and expansion resides. And so it makes sense then, if the World Bank, whose mission is the alleviation of poverty and economic growth, to focus on that element of the economy that actually is that engine of growth. And in order for that engine of growth to find its way and to achieve its objective, there must be an environment in which it operates which is conducive. And that, of course, means the regulatory environment. You know, business is going to happen in economies, and in developing economies. They can either happen in the informal sector or in the formal sector. And what we mean by the informal sector basically is that that's that part of the economy that's outside of the law. It is not regulated. Laborers in that market don't have the protection of labor law. Entrepreneurs don't have access to traditional forms of finance, etc. So if you want more of that part of the economy to come into the formal sector, and if you want more and more entrepreneurs in general to be encouraged to start businesses, then it's important to have the conducive environment for them to do so. So we focus on what are the regulations that an entrepreneur is going to come up against in order to start and operate a business. And that means we have to go to the very beginning. How conducive is the regulatory environment to starting a business, to accessing credit, to registering property, and all the other areas that we look at in the Doing Business report, which I'm sure we'll touch upon.
Yeah, and in fact, I know we have a graphic of the 10 indicators that you use that SLCN will probably pop up on the screen right now. But before talking about those specifically, I would like to follow up a bit on this notion of the informal economy, and so I guess one of the sort of ongoing debates in economic policy is on regulation. And on the one hand, we have the libertarians who are saying regulation is bad, it's a drag on business and makes it difficult for entrepreneurs. But it sounds like your goal is really to bring these underground informal businesses into a more formal structure where they are regulated and where they are part of the formal legal economy. So, you see regulation then as being helpful, it sounds like.
Yeah, most definitely. And in our view, it's not a question of more regulation versus less regulation. It's more important to have smart regulation. It's to have regulation that finds that balance between securing the operation of certain economic activity, and at the same time not being such a high barrier to entry with such high transaction costs that people prefer to operate in the informal sector, or even worse, not operate at all. And that's really what we mean by smart regulation. So, for example, how smart is it to have to present 10 pieces of paper to 10 different windows in 10 different government offices in order to prove who you are before you can start your business? If the objective behind the regulation is to secure the ID of the individual, or to make sure that this person actually does own this piece of property that they're trying to have registered, then there must be a smarter way of fulfilling that regulatory requirement, but by lowering the transaction costs to the entrepreneur. Perhaps that means creating one window where all the documents are presented, and let the government offices then amongst themselves sort things out, so that the entrepreneur only has to face one hurdle rather than 10. It's that kind of smart solutions that we're looking at. To what degree can you find e-government to be a smarter solution? To what degree are there enough protections in your regulatory environment so that minority shareholders' rights are protected? And those are the kinds of questions that we look at. So we're not really looking at the question of more versus less. What we're looking at is smart versus not so smart.
Okay, and so you have this list of the 10 indicators. You mentioned a few of them, like starting a business, getting construction permits, which frankly in the state of New York and the county of Tompkins, where I am, I know is a real nightmare. Employing workers, registering property, getting credit, protecting investors, paying taxes, trading across borders, enforcing contracts, and closing a business. What I'd like to do just for a minute is to give people a better sense of how you go about creating this report. What I'd like to do is talk in just a little more detail about one of those indicators, enforcing contracts. So first of all, as I understand it, you break you create a standardized case that refers to, you know, the event. I mean, one of the things that seems so challenging to me is how you're going to compare two completely different countries on a dimension like how good are they at enforcing contracts. So again, as I understand it, the first thing that you do is that you break this down into procedures, time, and cost, and then you take this standardized case and you try to assess how difficult it is for the small business person to go through those. So can you just sort of sketch out for us how this is going to work in your analysis?
Sure. Basically, as you briefly mentioned, and what we do, and this is really new to the whole idea of measuring regulatory environments, is that we've created a systematic scientific way of breaking down time and motion into a measurable metric, if you will. A metric that allows you to say, okay, in order to start a business, I need to go through X number of procedures across Y number of days at a cost of Z. And this had never been done before the Doing Business project tackled it. And in order to do that, we need not only to break this activity down into something that's measurable, but we also need to make sure that it's comparable between countries so that we can actually compare how it is in country A versus country B. And therefore, in order to do so, we create a standardized case study. So we ask, for example, in starting a business, if you assume, and this is the assumption, every one of the 10 indicators has an assumption. If you assume a limited liability company, and you have 5 domestic partners who want to form a limited liability company, and these 5 domestic partners have done their own analysis, and they're assuming that the capital that they need in order to start this company is equal to 20 times the gross national income per capita for that country, that this company is going to be operating at a level, an annual revenue level equal to 100 times gross national income per capita. Those are the set of assumptions that we ask. And then we say, okay, and then we have our a set of local partners in each country. In fact, we have almost 7,000 local partners that we send this assumption, or what we call the survey, to, and we ask them, what are the underlying laws and regulations? Cite the laws to us that control this kind of activity. Tell us what are the official government fee schedules, and we're only interested in official government fee schedules that are associated with this activity. And then we ask, okay, what in your opinion are the is the length of time that is required to achieve this? So that's it, and we have this for each of the 10 indicators, and that's how we make sure that we're able to compare apples to apples, and we have something that is comparable not only across countries but across time.
Okay, so it sounds like then, I mean, this isn't exactly a survey because, I mean, you're asking people to answer questions, but it's not all, how do you feel about your regulations? It's really go into the legal code and tell me what the law is or what the regulations are. And
Yes.
so it's really not until you get to the end where you're having people estimate time and so on that this becomes that there's some judgment. Is that right?
That's very true. This is not a perception-based survey. Perception-based surveys, of course, are valuable in other contexts, but in this context, what you want is as much as possible a fact-based survey. We want to get to the laws, and we want to get to the official fee schedules. And not only do we want to get to them, but we want to make them accessible to others. So we've created our own law database available on our website for people to actually go and see the laws that we're coding these indicators and this data against. And then, as you said, the only element of opinion, and it's not really even, and it's a very calculated element, is when we ask our local partners to estimate the time. And the way we make sure that we're even getting at that correctly is we have more than one respondent. And we even go and do our own data checks on the ground, because we travel to countries. We have a team of 45 professionals. We travel around the world. In a 2-year period, we cover all the countries in our survey. So each year we go on average to about 80 countries. So this is very much a hands-on database, very much a fact-based database.
Mm-hmm. I've got a couple questions on method for you, and one is this goes back to the issue of how difficult it can be to get comparability across countries that are so different. When you create a standardized case, like, for example, the size of the contract dispute is a certain multiple of per capita income, isn't there a concern that for very poor countries, then you're really dealing with, even though it's the same size relative to per capita income, it's still in absolute terms a very small amount, which may just be more difficult to deal with, or easier to deal with systematically than an amount that's in absolute terms larger. So I'm just wondering, are you sure that your standardized cases really do provide a level playing field for all the very different countries you're looking at, and how do you assess that?
That's a good question. In the case of enforcing contracts, what we're looking at, for example, is a claim that equals 200% the country's income per capita. So, and in enforcing contracts in particular, what we're looking at is a commercial dispute between two parties, a seller and a buyer, where there's a dispute after the seller has sold goods, the buyer has taken delivery of the goods, but refuses to pay for the goods for whatever reason. What then is the recourse that the seller has? How is this issue then satisfied? And you're going to your question, how do we know that 200% is really anything that we can stand on? Well, first of all, all of our indicators have an academic paper underpinning them. So this has gone through rigorous academic review. You can go to the academic study which underpins each of our 10 indicators from our website, so you can see what is the rationale exactly for why it is that we feel that this is an adequate measure. It has gone through some rigorous testing. Why is it that we feel that 200 is better than 300, is better than 100, for example? And we've also taken into account that, yes, as you've already noted, that we're basing this so that it's relative comparison based on the income level of a country, so that a case 200 times income per capita in the United States is going to be very much different than the case in Bangladesh, for example. And we feel confident that that's the level that we have chosen is relevant. Now, having said that, of course, doing business as an exercise has only been operating for 6 years. It's still relatively, as far as academics go, young project. And every year, invariably, we're perfecting our methodology more and more. In terms of enforcing contracts, we went through a methodology change just a couple of years ago, and we're pretty secure that this is a strong measure of what it is that we're trying to look at.
Mm-hmm. Okay, great. I'd like to move on a little bit, and actually this is, I want to warn SLCN, this is a little out of order. We have this really fascinating graphic from the report on credit. Texas, this is graphic 16 called credit, and what it shows is that higher economic recovery rates are closely tied to the ability of businesses to achieve, to get access to credit. And I'm wondering if you can just talk about the type of analysis, Dahlia, that was underlying this and what you see as being the implications.
Okay, you have me at a disadvantage. I'm trying to find the exact slide that you're talking about.
Okay, well, I can just tell you that the one I'm looking at ranks economies by quintile of recovery rate, and then looks at the extent of credit by GDP and also the percentage of firms perceiving access to credit as an obstacle.
Right. Yeah, I see that. What we're saying here is that there's a correlation. There's no causality here, but there is because we haven't tested for that. But there is a correlation between the amount of available credit and how that economy ranks. So where economies on average rank the lowest, there tends to be lower levels of available credit. And this also correlates very strongly with perceptions on the other hand of entrepreneurs who perceive access to credit as an obstacle. Where there are higher rankings, there tend to be lower perceptions of credit as an obstacle. And I should just note here that the Doing Business team has a unit also within our overall directorship here that's called the Enterprise Surveys, and I would also invite you to check that website out. It's called enterprisesurveys.org. And what that is, in fact, is a perception-based survey. What they do is they go out and ask firms about their perceptions of the business environment on many dimensions, and one of them is credit. And what we've done here is we've correlated those perceptions of firms to what we are actually seeing in terms of correlations between rankings and access to credit.
Mm-hmm. Okay, we have a question from Intliber BNT on credit. He is asking whether you think Islamic restrictions on banking are a factor limiting development in the Muslim world.
That's an interesting question. It's not something that we look at Doing Business. I'm not sure that I actually have enough facts to respond to it. I did see a number of very interesting reports lately in media which showed that, especially in light of the financial crisis, which showed that Islamic banking, because it is a risk-sharing sort kind of banking, that this may be an interesting model for countries to look at going forward in light of the recent financial crisis. But in terms of Doing Business, I don't have any direct facts to give you on that.
Mm-hmm. Yeah, and I guess just thinking about the way your report is structured, to the extent that Islamic law affects the number of steps you need to go through to get credit and your ability to get it, that would show up. The end result would show up as in the ranking. And so let's actually talk about the rankings. We have this great map that ranks the 181 economies that you look at from number 1 to 181, and this is considering all 10 of the indicators that you cover. I guess I also want to mention that you have this great link on your website, Business Planet, where you can actually work with the map that we can show a single graphic, but you can actually work with this map dynamically. So my producer Bjorlin will pop that link into the chat so that people can can check that out. So we have this map, and just sort of at a glance, what I'm seeing is that northern Europe, Eastern Europe look pretty good. Africa does not look quite so good. Before we talk about specific countries and where they stand, I want to clarify that now doing business, your goal is primarily to assess, right? Not to influence what they do, but there's another group within the World Bank that actually works with governments to help them improve their ranking. Do I have that right?
Yes, indeed. We have two units. The unit that I work with is the Doing Business project, where we do the measuring and we do the data collection. And there's another unit called the Doing Business Reform Advisory Unit, and its job is to respond to government requests, to advise on what kind of regulatory reform would be useful and would have a positive impact on not only on doing business but on entrepreneurs in general.
Mm-hmm. We have a comment in the chat on local corruption from Bevan Whitfield, who's talking about the severity of the problem with local corruption. So I'm wondering if you can talk about how you capture corruption in your measures of the indicators and the rankings.
Well, we don't measure corruption directly, but we do measure corruption in an indirect manner. It's implied in actually measuring steps in time. And when we say that it makes more sense, smart regulation is important, that's partially what we're attempting to capture in that statement. So, for example, if you need to go through meet several people in order to accomplish something, to run your business, that's several opportunities to be for a bribe, basically. However, if you limit the number of interfaces between an entrepreneur and the bureaucracy, if it's limited to a single window, for example, or even better, if it's an online service, then you're limiting the opportunities for corruption. And so that's what we mean by some of the transaction costs that are built into a very complicated regulatory environment. It's not just the time that people have to go through in order to accomplish something, but it's also this kind of a hassle and transaction costs that they often face, which can be an impediment. We've done a lot of research, for example, in Africa, to show that women often are not interested in going through the processes of starting a formal business because, in fact, they're harassed and hit up for bribes, and they would rather not come up with that. So either they operate in the informal market, where they have less access to finance and less ability to grow, or they don't even consider going into private business.
Mm-hmm. Okay, great. And now let's start talking about specific countries and specific reforms. And I guess let's start with reforms rather than the countries. You've been tracking this now for a number of years, and one of the figures you have is basically on which regions of the world have the most countries with at least one positive reform. So I'm wondering if you can just talk a little bit about the different regions and the reforms that they are making.
Yes, in fact, since we started doing this report, Eastern Europe and Central Asia has been the fastest reforming region in the world. This year, 93% of the countries from that region actually implemented at least one reform. And they're continuing on this fast pace. Many of our top 10 reformers, in fact, 4 of them are from that region, and all 4 of them happen to be on the top 10 reformers list for the first time. In addition to Eastern Europe and Central Asia, 2 other regions are also keeping a very steady and quick pace of reform, and that's the Middle East and North Africa. And surprisingly, this year, East Asia and Pacific, which picked up from last year, it had dropped off a little bit, but it had been a faster reformer in previous years, and this year it picked up again. And most pleasant surprise has been sub-Saharan Africa, in which 61% of the countries of that region have implemented positive reforms this year. In fact, this is the fastest reforming year for that region. Other regions, Latin America and the Caribbean and OECD economies in South Asia, continue to reform at a rate of 50% of their economies. So that's an overview in general of which regions have been reforming the quickest.
Mm-hmm. And we had just a few moments ago, we had a list of the particular reforms that are most popular, and by a pretty significant amount, starting a business is the area of the most popular reform. Why is that?
Well, it's the low-hanging fruit, and it's what makes sense. If you're talking about making things easier for entrepreneurs to do business, then where is it not easier to start than starting a business? And that often starting a business is a very procedural and very bureaucratic process. Usually there is a company law or one form of a law that dictates what needs to be done in general terms, but the rest tends to be administrative or ministerial directives, and therefore it's easiest to reform. It's easier to say, let's put 10 desks behind a window, or let's reduce the number of stamps, or let's put some service online, and it has the highest impact. We've seen in our analysis that countries that make it easier for entrepreneurs to start a business tend to in fact have a higher number of businesses per capita, and that associated with that, of course, is greater job creation.
Mm-hmm. Okay. Go ahead.
No, I was just going to say, so starting a business has been the predominant area of reform this year and in previous years, not only on a global level, but also on a regional level. And this is followed by two other areas, mostly paying taxes and trading across borders, which tend to be popular areas of reform as well.
Okay. You referred to simplifying tasks for businesses by putting processes online, and not surprisingly, since this is a virtual world show, we have an audience that's very interested in the use of online technologies in business. We have discussed before on Metanomics some advances, like for example the state of Vermont allowing firms to incorporate entirely virtually. They never have to file anything in hard copy. It can be all online and PDFs, and they don't need to have brick and mortar anywhere. And I'm wondering if you. I know I'm probably pulling you a little outside the bounds of the report itself, but I'm wondering if you could just speak to the any thoughts you have on the role of virtual business, virtual commerce, and whether you see that playing an important role in making business easier to do.
By all means, it plays a very important role. It's the next level of business simplification and rationalization and getting regulation to do what it needs to do. And of course, your countries are limited by their capacities and their penetration levels and and their ability to roll out more e-government and so on. But to the extent that this is a fast changing limitation in many countries, we definitely see that there is a future and that this is where most processes are going. So we are already seeing it in many countries in the areas of paying taxes, for example. More and more countries are allowing their companies, not only allowing but requiring their companies to file online, keeping in mind that there are many forms of taxations, there are many forms of mandatory payments that we're looking looking at in this indicator. For example, Social Security payments and allowing companies to put that online. And to the degree that this is happening more and more, of course, it's making the life of entrepreneurs easier. Being able to start a business just by checking out trademarks, for example, online, rather than having to go through a city hall and going through piles and piles of books, or waiting for a government official to go through these books for you to see if there's somebody else with the same name that you want to use, for example. So there's many uses, obviously, for online and internet-based services, and we're building this into our methodology. We're looking for it when we do our data collection, and we're seeing that it's a general global trend.
Okay. Well, we are basically out of time, Dahlia, but before we end, I have to ask, you are getting your PhD from Georgetown, and can you tell us about your dissertation topic?
I can, but it's going to bore everyone to tears because it has nothing to do with doing business. I tend to have a very eclectic interest and background, and so it has nothing to do with being an investment banker or doing business. What I'm looking at Georgetown is, well, maybe it's slightly related. I'm looking at what are the conditions under which a country can be formed, a new state can be formed. What are the international legal requirements? What are the political requirements? What are the economic requirements, etc., in order for a successful state formation? So that's it. Very boring. Okay.
Well, actually, I doubt that is boring to people in the Balkans.
Yes, indeed.
So,
yes.
Actually, it sounds like a very fascinating topic, and I wish you the best of luck in that. Thank you so much for joining us and telling us about the World Bank's Doing Business report. And maybe we can have you on in a year, and you can tell us who the new #1 reformer is.
Indeed. Thank you very much for your interest in doing business. And next year, I look forward to you telling me that you're interested in having us with you again. Thank you again. Thank everybody and I thank everybody for joining.
Okay, Dahlia Khalifa, Senior Economist of the World Bank. So thank you. So this has been the second Metanomics event this fall that has focused on real-world business and policy issues. A couple weeks ago, we had Cornell professor Maureen O'Hara discuss with us the real-world credit crisis. So in today's Connecting the Dots, I'd really just like to talk about two things, and the first is really just a request from you. I would like to ask for some feedback from the Metanomics audience. What do you think of having Metanomics events focus on real-world issues as our main event rather than virtual world issues? Is that something that you would like us to do more often, less often? Is it, well, just take a moment and right now, if you would, just type your thoughts into the local chat channel so that we can pick that up by chat bridge, or if you would prefer, send me a private instant message. This is just sort of a spontaneous poll, but just give us your thoughts right now as we plan the future of Metanomics. This will be very useful for us. Second, I would like to just briefly tie the discussion we had with Dahlia about the indicators of the ease of doing business into Second Life. How easy is it to do business in Second Life? Well, when I run through these indicators, and perhaps SLCN can pop these up on the screen, let's think about the regulatory or, Linden Lab imposed requirements on things like, well, starting a business. Well, first you have to get into Second Life, don't you? And having brought a number of people into Second Life just recently, that is not not an easy thing to do. Construction permits, well, we don't really have anything like that. Employing and firing workers. This is a case where I was very interested to hear what Dahlia had to say about the helpful role of regulations, because there really is absolutely no regulation right now on hiring and firing workers, and that also creates problems because it is very difficult to identify workers who are dedicated, capable, have certification for their ability to take on certain tasks. Getting credit, protecting investors, well, actually, I would just suggest that viewers, go back to panel discussions that we've had on Metanomics and about the financial sector, about the stock markets, the banks, our interview with Int Liber Brodigan. Very, very lightly regulated, if at all, and probably the markets in my assessment, are not doing a great job in making it easy for people to get credit or in investing or in protecting investors. So as you walk through it, I think I'm sympathetic to Dahlia's view that smart regulation is a lot better than no regulation, and I will leave it at that. So thank you very much for watching our show today and participating in the back chat. Next week, we will be taking a close look at Resible, a company that is doing some very interesting and active business in Second Life, providing entertainment for a very large group of Second Life residents. We will be hearing from John Himoff, the founder and CEO of Resible, and he will also have some thoughts on recent pricing changes on Linden Lab OpenSim land. So thank you again for joining us. See you next week. This is Rob Bloomfield from Sage Hall in Second Life and Real Life saying bye-bye.